Welcome back to my YouTube channel, guys. This is Devin Burr, aka Mr. Burr. I appreciate you guys stopping in. We talk about all things infinite banking, bank on yourself, the and asset, privatized banking, whatever you want to call it. That's what I talk about here on this channel and how to use it to fund real estate. And that's what I do. But you don't have to just fund real estate, you can use it for whatever you want. But basically, it is using life insurance as a vehicle to become your own bank, to mimic what banks do. And banks make a lot of money, a lot. So you definitely want to mimic what banks do. And yeah, that's what we talk about here. So if you get value from this, go ahead and hit the like button, subscribe so you get more of my videos. And what I'm going to talk about today, very short video. I want to answer a lot of the questions that I get, very popular questions. And that way you guys can just get value from these and you can learn from what I know about this concept. So the question I get a lot is funding a policy for infinite banking, for privatized banking, for bank on yourself. Again, the and asset, all the different names that it has. How you fund the policy so that you can do the concept. A lot of people ask, like, okay, so how much can I put in? How often can I put in? Can I put in more? Can I put in less? So here's how it works. Very simple. When you fund a policy built for infinite banking, or again, all the other names that it has, you are overfunding a normal whole life insurance policy with a mutually owned company. That's all you're doing. So you've got a base premium that pays for your future death benefit. So you're going to have a low base premium, lower death benefit, high paid up additions, which turbocharges your cash value. So, what you do is you set your ceiling on the policy, on what you can put in. That is entirely up to you. You set that number. So, whether it's $10,000 a year, 20, 50, 100,000, $1 million a year, $2 million a year, you set the limit. And you'd never want to put more than the limit. If you put in more, what happens is it triggers what's called a MEC, a modified endowment contract, which was brought in but in 1988. IRS set these rules because wealthy people were just dumping millions of dollars into these policies and avoiding all taxes. So they set a limit to where you can only fund it up to a certain amount. So if you guys want to look into that, I'll make a video about it. It's the MEC 7 pay rule. So bottom line is you set your limit for the policy. Let's just call it 10,000 bucks a year. Don't put in more than $10,000 a year. If you put in more, you turn your policy into a taxable event. So you get taxed on your growth for the rest of your life. You don't want that. You don't want to pay Uncle Sam more than you have to, right? So set your limit, never put in more. You can put in less because, again, all you're doing is you're overfunding your policy. You have a base premium, let's call it $4,000, and you overfund it to $10,000. So the 6,000 is what's called paid up additions. It just turbocharges your cash value. But let's say 1 year you just don't have 10,000 bucks. You can just put in 4,000 or 5,000, 6,000, 5,500. You determine how much you put above and beyond your base premium. So again, let's say it's 4,000 bucks is your base premium and you set your limit at 10,000. That means that 6,000 bucks is your paid up additions. Try to put that extra in every single year because then you're going to get more growth. You're going to get more dividends. You're going to just basically um, capitalize on the maximum growth of that policy. But if you can't, you can put in less. Just don't put in more. So I get that question all the time, like, can I put in 2,000 now and then when I get a raise up it to 6,000 or 10,000? Unfortunately not. You set your limit in the beginning and you cannot put in more per year than that limit or you get taxed. So just never put in more. If you can't put in that much, you can put in less. But here's the cool thing. Let's say you start a policy for infinite banking. You set your limit at 10,000 bucks and you're putting that in and you get a raise at work. You get more money coming in from an investment. You have a windfall of cash and you want that money compounding because in the policies, you get guaranteed growth, tax free, as long as you do not mech the policy. So your limit's 10,000 that you set, you've got more money, don't put it into this policy. All you do is you start a second policy and you set your limit on the second policy. So now you avoided the taxes on the first one. Now you've got a second policy that you avoid taxes because, again, same rules apply. You do not overfund it above your limit that you set. If you have more money after that, you start a third policy, a fourth, a fifth, a sixth. There's no limit to how many you can have as long as one, you're healthy enough, and two, the amount of the policy that you're setting is justified by your income. If you're setting a policy for $100,000 a year and you work at McDonald's making 10 bucks an hour or just whatever they make, it's not going to get approved, right? So hopefully that adds some value for you guys. I get that question all the time. So bottom line is you set your limit, fund it to that limit as often as you can. Try to do it every single year. If you can't, you can put in less. And one other thing is if you put in less, you're falling behind on your max growth, right? Because you're not maxing out what you can put in. So if you fall behind, you can catch it up later. So let's say for 2, 3 years, you just fall behind. You just can't put in that max. And then you have a windfall of cash. You can catch it all up and get that money compounding. Just don't go over. So hopefully that added some value for you guys. If so, hit the like and the subscribe so you get more of these videos when I put them out. And in the comments, go ahead and, what questions you guys want me to answer, because I'm going to make these bite-sized videos to answer all the most common questions that I get about infinite banking and how it works. And yeah, stay tuned because I'm going to come out with these as often as possible. So I appreciate you guys. Until next time, love y'all. Peace.